Good morning. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good morning, Scott.
Good Saturday morning, Megan.
It is. If you're curious why you might have missed this yesterday, you didn't. I had some challenges getting home from Houston. Mother Nature apparently had some other plans and decided I needed to hang out in the Lone Star State a day longer. It's been, how much snow do you have? Because you guys were not exempt from this weather mess either.
Yeah, so right about 10 inches here in Columbia. So, and that early snow was awful wet and stuck to the roads really well.
All right. Well, there's been weather challenges really throughout much of the Midwest. So hopefully everybody is staying a little bit warm and can watch us as they're defrosting this morning. Let's kick things off and recap what happened this week in the markets.
Yeah, Megan, this week in cattle markets, cash cattle were nearly $3 higher on the week. Those feeder cattle markets, some of them were pretty lightly tested, just given some of the weather issues that we faced, but I'll call them 5 to 10 lower this week. The April live cattle futures contract was up $3.75, and the March feeder cattle futures contract was up nearly $6.50. Choice box beef was down about $6.90 this week. Ribs and loins really led that decline on the box beef side of the equation. On the hog side, cash barrel and gilt prices were $2.80 higher this week. Lean hog futures for April were up $5.60, and the pork cutout value gained 70 cents as strength in loins, butts, and bellies offset what was some weakness in hams this week.
Definitely interesting to see how kind of the market played, especially the cattle side of things. And we'll talk a little bit about that as we get started talking about the cattle inventory report. Let's talk slaughter numbers. And we still aren't necessarily talking percentages in comparison, just because we're fairly early in the year. But how much did the weather impact slaughter numbers last week? Or did it have an impact there?
So it looks like we were a little slower this week. For the week ending February 5th, USDA is telling us a run of 639,000 head of cattle. That is down 4,000 head from where we were a week ago and down 13,000 head from the same week a year ago. On the hog side, a lighter run this week on hogs, 2.436 million head of hogs. That's down 90,000 head from where we were a week ago and down 237,000 head from the same week a year ago.
All right. The big report this week, cattle inventory numbers came out on Monday. This is that biannual report. So we see it in January and July. Let's take a look at how things kind of are shaping up and shook out from that report.
Yeah, so positive report from a cattle price perspective in my mind, as many of the categories came in below pre-report estimates when we look at some of the numbers that USDA gave us in terms of the cattle report. So total beef cows came in at 97.7. That's outside the lower end of the pre-report range. So fewer beef cows than many would have anticipated. Total cattle and calves out of this report down 2% from where we were a year ago. Beef heifers for replacement as well. So down 3.3%. That fell outside the lower end of the range as well. So all in all, that report certainly confirms fewer cattle, cows, beef cows in particular, and gives us, I think, some positives as we look the next 2 or 3 years.
Scott, let's take a look at like some of those state numbers. Were there some surprises where we saw maybe some numbers shift or decline in liquidation in herds after I think about the drought challenges that many producers faced this last year?
Yeah, so it's the head scratcher when we start looking state by state, I think, in this report. So I'll start with some of the drought states here that, we'd expect them to be down pretty hard. So South Dakota down 189,000 head of beef cows this year relative to a year ago. Montana down 90,000 head. Both of those make a lot of sense to me, just given how dry things were there. North Dakota, though, only down 20,000 head. That one surprised me, just given I think there were some pretty dry spots in North Dakota as well. California, we don't talk about California very often because they don't have that many beef cows, but it was very dry in California, yet beef cows have frankly been going up in California. And this report showed another 20,000 head of beef cows that found a home in California. Texas down 160,000 head, a little bit surprising. Texas had some dry weather, but it certainly went away earlier. The one for me that's the biggest head scratcher still is Missouri, down 94,000 head. Weather really wasn't a concern in Missouri. I get a lot of anecdotal of, well, it's just been really tough profitability. And so, okay, yes, I get that, but why does Missouri stick out from any of the other Southeast states that show at best modest declines? I don't think our profitability in Missouri is that much different than the other states. So what's going on in Missouri? I'm not sure I have a handle on that yet, but those are the state by state numbers that make me scratch my head just a little bit.
It definitely will be interesting to see kind of how things continue as we look and work towards that July, to see if that continues or maybe we stop a shift there. When we look at this, obviously, I think the big story that comes out of it is the fact that we're still contracting. Like, this is another brick in that wall that says that our herds are getting smaller, our numbers are getting smaller. You mentioned that kind of sets us up for a fairly positive 2022. As we look ahead, how much do we have to manage risk in the long term, thinking about higher input prices, supply chain difficulties, and things that really create additional volatility in the markets?
Yeah, so I do think it's important, and a few things here. So hay stocks, you and I talked about those December hay stocks already being down. So risk management may be different in that. How do I make sure that I keep my hay and pasture costs as low as possible, especially on top of what's likely higher hay prices is higher fertilizer costs? How are we going to fertilize those pastures come spring? I think I would encourage everyone to think very carefully about that input side of the equation. Now to prices, for me, when I look at the report, so feeder cattle outside of feed lots as of January 1, little more than 25.5 million head. All right, so just to put that in perspective, we were at a little more than 26 million head in 2021, but back in the glory days of very high cattle prices, so in 2015, we were below 25 million head. So we're kind of in this in between where I think there's a good opportunity for some higher prices. But if demand were to falter or exports were to falter, we might not realize as strong a prices as we want. So I will say it looks really good, but risk management should always be thought through. And again, how much risk can your individual operation, take in what looks to be higher cattle prices, but also higher input costs?
It's got Restaurant Performance Index out this past week as well, and kind of not exciting, but it's some exciting good news too.
Yeah, so I go not exciting, but good news in terms of, we can look back at September of a Restaurant Performance Index of 102.9. December number came in at 104.8. That's unchanged from November. So for you and I, not much new news, but it just keeps saying we're chugging along, growing that Restaurant Performance Index, both the current situation, so same store sales, customer traffic, all look to be good. And then expectations that also look positive as well as we look ahead over the next 6 months. So all in all, a report to me that says not a lot changing on the demand side when we look at it through the lens of the Restaurant Performance Index.
No news, good news.
We'll take that on a Saturday morning.
Yes, we will. All right. USDA came out with their first look at farm estimate, or USDA farm income estimate for 2022. Walk me through those numbers and your thoughts there.
Yeah, so USDA gave us our first 2022 estimate of farm income, $113.7 billion. That's off of what was $119.1 billion they estimate for 2021 at this point. So lower farm income expected in 2022. And you can really look at that simply in a few ways. So total expenses up $20 billion in 2022 relative to 21. So higher fertilizer, et cetera, all those input costs going up, push down farm income. Government payments are currently estimated to be down $15.5 billion. So fewer payments going out in 22 doesn't offset what's $29 billion increase in crop and livestock receipts estimated by USDA. So down year for farm income, but still, I will say relative to history, it looks pretty good. And when you look at it relative to 2019, so let's get pre-COVID here for a minute. 22 farm income would be up almost $35 billion, Megan, relative to 2019.
It's really kind of highlights the important role that those farm payments or the government payments played in helping to keep producers profitable through the challenges of 2020, 2021 as well.
You're absolutely correct. We can look back and again, I often will say, think about mid-March of 2020 and what was your thought process when the worst of COVID was beginning to unfold. And a lot of folks would have said it's going to be a bad year for agriculture. And it turned out to have its challenges for sure. But the underlying farm income numbers at the end of the day were better than I think any of us would have thought. Thank you for some government stimulus money getting into agriculture.
Let's talk, and I think before we move on for that, I think it would also have to play on the consumer side too, right? We saw those stimulus checks come through or the government payment, which had to have helped us a little bit maintain the demand side, which I think about, obviously on the livestock, which where we focus, was so important to making sure we had product still moving when so much had been disrupted.
Yeah, so you look back at things like disposable income for both 2020 and 2021, and it was pushed higher in part due to stimulus efforts on the consumer side, which then gave consumers more dollars in the pocket to buy things like food. Now you look at 2022, and current estimates would suggest a disposable income estimate that's frankly unchanged from 2021. And that's due in part, I think, to less stimulus going to consumers as well. So if that slows meat demand here in 2022, did we push out further some of this drag that we're going to have from COVID-19? I'm not sure I'm ready to make that call yet, but it's one I'm certainly watching.
As we wrap up today, jobs report and really a positive month for January, but some positive revisions to November and December.
Yeah, that's right. I mean, we had a lot of signaling before the report that the January jobs report could be fairly weak. The pre-report estimate out of Wall Street was for about 150,000 more jobs, yet BLS reported 467,000 in jobs in January, as well as big revisions in November and December. December originally had 199,000 jobs added, but it went up to 510,000 jobs with the revisions out of this report. So I think there was always a concern that this last wave of Omicron was creating folks sitting on the sidelines. The jobs report we got certainly doesn't suggest that was the case. So good news, I guess, from a demand perspective for meat products in particular, because not only did we add jobs, we continue to see wages go up, again, putting more money in consumers' pockets, which they're going to need given some of the higher prices that we have for beef and pork today.
Scott, that'll do it for us this week. A big week for reports this week. We have another big week next week. What are some of the areas we're watching next week?
Yep, so USDA will give us their monthly report next week. We also will get monthly trade data as well as retail prices and finish the week with consumer sentiment.
The monthly trade data, that should wrap us up for 2021, correct?
That is correct.
Will be interesting to see how we ended up for the year.
Yes.
Scott, have a great weekend. Thanks for joining me on this Saturday morning. Always great to see you.
Yes. Take care, Megan.
So, our weekly livestock market newsletter emailed to your inbox every week. I would say Saturday morning, probably going to be Saturday afternoon this week. Go to our website, brownfieldagnews.com. You can submit questions and comments as well as subscribe. And if you're looking for some great podcast material, go to brownfieldagnews.com/podcast. Have a great weekend. Talk to you next week. I'm Megan Grebner for Brownfield.